This is unique because this is a crisis caused by the American president, not a crisis he's trying to clear up. And because of that, making a forecast about where we go requires me to have an insight into the brain of Donald Trump. And I can't be confident that even he knows at this particular moment what he's going to do next. So forecasts are hard, enormous uncertainty, very, very worrying times. And the thing that is worrying me most at this moment, we've seen, since he announced these tariffs last Wednesday, tumbling stock markets day after day, but much more significantly, in my view, seriously since the start of the week, falling prices for US government debt since Monday. This is precisely the opposite of what Donald Trump thought was going to happen. He thought that investors would back America and that the interest rate that the government pays in America would fall. The interest rate that the government pays in America has been rising since Monday. It's now over 5% for the borrowing that it makes for 30 years. That is really scary, and it's had a really negative impact on the UK and in fact on government bonds markets across the world. So the contagion from America means that the price that this government now has to pay to borrow for 30 years is back to levels we have not seen in this country since 1998. These are higher interest rates than we even saw during the Liz Truss shock. So Trump damaging America, damaging Britain. And therefore, in a way, the most significant thing that Keir Starmer said to me today, and this was a line he desperately wanted out there, was that he is not going to change the UK's fiscal rules. These are the rules that constrain how much the government can borrow.
Stability is hugely important. The fiscal rules were put in for a purpose. They're ironclad. They're non-negotiable. And we will always act.
And they're not going to change.
They're not going to change. We're acting in the national interest. Those fiscal rules are foundational to the stability that we brought to our economy. So we go ahead in that calm way. Obviously, we're talking to the US to see what we can do to mitigate the situation. We're talking to the industries and the sectors most affected. And we're turbocharging what we can do in our own economy. And that's the approach we're taking. And of course, working with others to see where we can lower trade barriers around the world. But calm, pragmatic, and being absolutely clear that the framework for stability we put in place, that stays in place because that's crucially important.
This is, frankly, really bad economics because it means these fiscal rules, because of the global economic slowdown, the recession, which I expect to be triggered by market turmoil, which will mean a significant economic slowdown in the UK, which means less tax revenues being raised by the Chancellor, which means that by the time we get to the autumn, she will almost certainly, as a result of her fiscal rules, have to put up taxes or cut spending. And I said to him, look, Prime Minister, in a slowdown, the last thing you should be doing is cutting spending or putting up taxes. It's the opposite of what you need. What you need in a slowdown are measures to stimulate the economy. He said he totally rejected that. He then cited Liz Truss and her fiscal debacle in 2022 as reasons why he rejects that. And he was desperate. This is the thing that he repeated time and again, that the fiscal rules are set in stone. They are not going to be changed. Now, why is he saying that? He's saying that because he is desperately worried, plainly taking advice from the Bank of England, that if the government looks as though it's wavering from those fiscal rules, the UK government will be punished by investors, and those interest rates that are already back at 1990 levels being paid by the government will go even higher. So this was an interview with me which was all about trying to calm investors and, reassure markets.